How we doing, everybody? How we doing? Today is Cinco de Mayo, Thursday, May the 5th. And as I mentioned, every Thursday at about 7 p.m., got a little late start tonight. Had some technical issues with the logging in. But nonetheless, I am here. I am just trying to get my Instagram live set up as well, so just bear with me one moment. Let's see. So every Thursday, what I'm going to be doing is kind of going through real estate note investing, just trying to go through different parts of it, explaining why people should, look at real estate note investing. And then as we continue to go through, we'll just go through, what a deal looks like, how the numbers break down, and just the documents of it, just kind of the whole thing in little bits and pieces. I'm usually not here very long. I don't want to try to teach a seminar. I just want to give you some information, some things to think about. I mean, obviously, if you would like to know more information, we can set up a time to talk. But I think now is a good time to really discuss notes. I think that real estate note investing and trying to be creative in the financing right now is very important because of what's going on. There's a shift in the market currently going on. Interest rates are going up. Certain people who could qualify for mortgages are not qualifying. And this is where creative financing and real estate notes kind of fills in that void right now, and probably is going to be going on for some time. Interest rates were low for a very long time. We had the pandemic, so you had a few years of very low interest rates, and now there has to be a balancing act to that, so to speak, and they have to go up. So how high they go up, no one really knows, but we know that they are steadily going up. As of yesterday, they went up like 0.5%, which was, if I'm not mistaken, the highest single day raise since the year 2000. So that trend is going to continue. So like I said, I don't want to be here too long. I don't want to bore people. I like to keep them interested and just give them some, like I said, some basic information. And next week we can pick up. If you have any questions, concerns, comments, please post them either on my Capital Group as well. You can leave a comment, leave a question, and we'll make sure that we'll get that covered. We'll be here every Thursday, 7 p.m. Until I'm going to continue to do this, and hopefully it brings some value to people. This is a chance that people can really take advantage of growing their wealth, growing their retirement accounts, and real estate note investing is one way that you can do it. So let's we're going to talk about today why invest in notes. I'm going to give a few reasons here and just kind of explain a little bit about each. Again, not trying to go too long and be too in depth. But last week, if you missed it, you can go on my Instagram. You'll see the information in there from last week's video, or on my Facebook page. It is there as well. But we kind of talked about what a note is. A note basically is an IOU. A note kind of goes along with a mortgage. A mortgage is something that the homeowner pledges back to the bank, with the house being collateral if they do not fulfill what is on the note. The note is the IOU. It spells out the terms. It tells you, when you have to pay, how much you have to pay, and how often you have to pay, and what interest rate you have to pay at. So that's it. That's what the note does, and it goes along with the mortgage. So if you do not pay, the mortgage will stipulate what happens at that point. And like most people know, you know, the house becomes the collateral for that note. And then mortgages are here in the tri-state area most of the times, and what they call the judicial states, they use mortgages. They have other security agreements similar to a mortgage that have different names in other states. So we kind of touched on that last week, and then this week we're just going to talk about why invest in notes. So I have a few reasons here. The first one is low risk and high yield. The reason why we say low risk is because we can do a lot of research on a property, and when we buy it, we're buying it below the value. Usually what's owed on a property, you're going to buy a note for less than what the owner or the person paying has to pay back. So right there, you're lowering your risk when you're buying like that, when you're buying in ratios where there's more owed out there than what you paid for the note itself. Usually notes last 180 months, 200 months, up to 360 months, which is 30 years. So we're able to lower the risk and get the higher yield. So if a note, let's just say, typically what's been going over the last couple of years, been written at 2, 3, 4%. If we're able to buy those notes, we're going to buy them in a fashion where now that 2 or 3% interest rate, or that yield, is going to go up, because we're going to buy it at a price where less than what is owed on to be paid back over the amount of months. So we can increase our yield and have very low risk. See what kind of job they've been working, what their credit is. What are the two people in the house? If there's two people, what are they making combined? We can kind of look at their payment history in a lot of this and get a sense of who these people are and how they like to pay, and if they're paying. So all of these things allow us to lower our risk, where most of the time it'd be very difficult to lose money in notes. Not to say, I never want to give a false impression that you can't lose, but because anytime you invest money, there is a chance of loss. But because of what we call the due diligence and the research that we do looking into a deal, we minimize that, and we know going in, that we, how are we going to be able to make money. The next reason that it is secured by real estate, obviously, like I talked about, if someone doesn't pay their IOU, you have something tangible to take back to be able to recoup your investment. A lot of people out here are investing in stocks and bonds. Crypto is a big thing right now, which, all of those things are good. I don't want to talk bad about them. But if a stock goes bad, does the stockbroker give you a stock to kind of go and be able to, trade it in and recoup your investment? And usually you can recoup your investment at a minimum for what you put into it. A lot of times when it comes to housing, you're able to use your collateral to make back all of the money plus, maybe a smaller amount of a return than you were anticipating, but you usually don't lose money in this instance. So it is a tangible asset, that you have to be able to recoup your investment. So that's another positive. We always purchase at a discount. How many times can you say that? How many times that you invest in something that you are buying it, below the value? The way notes are purchased and sold, it's always at a discount. If they're if the value of the note is, let's just say, $50,000, there's $50,000 worth of payments left on the loan. A lot of times those are going to, just depending on what type of note it is, because there are different types that we talked about last week, where you have non-performing, performing, and what they call sub-performing. So if you have a performing asset, somebody's paying every month, and has $50,000 worth of payments on it, a seller, I would say 8 out of 10 times, most sellers, 7 out of 10 times, they know that they can't sell that for $50,000 for the rest of the payments, because of that $50,000 is being collected over time. So they would never get all of that $50,000 until 180 months, 200 months down the line. So what is that $50,000 worth to somebody today? It's usually it's going to be worth less than the $50,000. So now you're purchasing something, at a discount, and then if you take it all the way to the end, if you take it all the way to the end, obviously you've collected all those payments over time, made back your initial investment plus a good return. So, we always purchase at a discount, just depending on how much of a discount, just depends on the note itself and the person that's selling it. Some people, need to recoup the money. Other people, can, they don't necessarily have to recoup the money right now, so they don't have to sell at a big of a discount. But they always are sold at a discount. Another reason here is that we have multiple exit strategies. Any strategy within real estate, you can use being a note investor. If you're a fix and flipper, what you probably want to focus on is non-performing notes, where somebody isn't paying, and then eventually you can take back the property, you can fix it up, and then you can sell it. If you're a buy and hold investor, you can do this as well. You can buy more of the performing note, knowing that somebody is making that payment each and every month, and that payment is coming directly to you. And you're just collecting the payment. You don't have the responsibility of the property or anything like that. So you're just collecting the payment like the bank does. So if you're wanting to just get cash flow, you can have that as an exit strategy. If you took back a property and maybe you're not into fixing and flipping, you can use it as a rental property. That's another exit strategy. You could, let's just say if somebody had some issues with the note, stopped paying for whatever reason, you can get the property back from that particular homeowner or by foreclosure, and then you can create a new note for another buyer. Or you could create a note for a contractor that wants to fix and flip the house, but you don't want to necessarily do that. You can structure a note to make sure that, again, that you're recouping all of your investment plus making some money, so you don't necessarily, lose in this scenario. That's a great thing about notes. A lot of times when you have investments, you don't have as many of the exit strategies that you do with notes. Again, we'll probably go into, more of the exit strategies in another session, but, just kind of giving a broad picture of why you want to invest in notes. Another reason here is passive income with no landlord responsibilities. I kind of touched on it a little bit when I was talking about the exit strategies. Let me ask you this. When you're paying your mortgage to your bank and you punch a hole in the wall, toilet breaks, roof starts leaking, does the bank come out and fix that? No. It's up to the homeowner to fix it, but that payment is still due on the 1st or the 15th of the month, and they still have to make that payment whether the roof is leaking, the toilet is fixed, there's a crack in the floor, whatever. And that's essentially what we're doing. We're becoming the bank without the landlording responsibilities. We don't have any liability for the property or anything like that. The only thing is if this particular person stops paying, and then, we want to secure our asset, being the property, then we may have to do some things at that particular time. But other than that, we're not a landlord. Person just makes the payment, they enjoy the property, and we just make money each month and go about our business until, we have to maybe step in and do something else at a different time. So you don't have those responsibilities. So people that may have been landlords, maybe if you've gotten to a point in your life where you don't want to necessarily be a landlord anymore, but you still like the cash flow, you still need things to maybe supplement your income at this point in your life, or whatever the case may be, you can turn some of your properties over into notes and create notes where you can still get a good amount of cash flow, but not have all of those responsibilities as a landlord would. That's a great, a great thing in my opinion. Not having all of those headaches, getting those calls in the middle of the night, come fix this, come do that. That's not something that happens when you're a note investor. Also, another benefit is that these can be purchased in all states because we are the bank. A bank just doesn't buy where their office is. They buy throughout the country because, again, you don't have to physically go to the property. You're not checking up on the property. You're not doing any of that stuff. So why can't you buy something in Seattle or buy something in Virginia, Miami, Michigan, anywhere in the country? Anywhere that the numbers make sense and it's in a range where you can afford based on the money that you have to invest, you can do this anywhere, again, because you don't need to go to the property, you don't need to fix anything up or do anything like that. All you're doing is just collecting payments, and then again, if something goes wrong, because we live in this age with technology, we can always reach out to the appropriate resources in states to assist in what it is that we need to do, whether it's attorneys, whether it's what they call boots on the ground, real estate agents, brokers, anything that you may need, you can get in contact with somebody that is closer to the property that can go and do certain things. You have servicing companies, and you have companies that specialize in going out and visiting properties and have people in different states for a very minimal charge. They can go out and make sure that, if you need a document signed or if you need somebody to go to the property, you can usually do that and not have to be in that state. So you're really open to, this whole country when it comes to note investing. So you don't have to, like I said, you don't have to live down the street or within 40 minutes, an hour of the property, because you don't need to go there. You have to kind of let that go, so to speak. A lot of times when people invest, especially in real estate, they want to invest where they live because that's comfortable for them. They think that, if something goes wrong, I can get to the property. But there's a little bit of a mind shift and a change here when it comes to notes, because you don't have to do that. That money just comes to you each and every month. And at the appropriate time, if something goes wrong, we have different resources and things like that can assist us getting things back on track, getting people out of the property, putting other people back in, and things of that nature. So and last but not least, this is the last one. Like I said, I don't like to try to be here too long. Just want to keep you for a few minutes, half an hour at the most. You can use your retirement funds to do this. Again, because we're talking about 100 payments, 180 payments, which is 15 years, 360 payments, which is obviously 30 years. You have a long time that you're going to be collecting these payments. So why not use your retirement fund? I mean, you can use your retirement fund with as little as $100 to invest in notes. I think, most people may not believe that, but there is a technique and a strategy that you can use as little as $100 to be involved in a note. And then, when that note eventually gets paid off, refinanced, the person sells the property, you can kind of see what your return is on $100, because for $100, you're going to be owning a certain amount of payments. And again, that's kind of like a technical thing that we'll get into later, but you've been working, you've been at your job 10 years, 8 years, 12 years, 25 years. You've built up, the company match. You've been putting money in there. You may have some money in there. You can put that money into a self-directed IRA, which is still a retirement account, still has the same benefits that you would with your company plan, but now you have more flexibility to invest in things that you want to invest in. You're not just beholden to what that 401k company wants to do within the stock market and things like that. You don't necessarily just get pigeonholed there, so to speak. I mean, you can even take some of the money from your retirement account and move it over into another account where you have more flexibility. And then what you can do is kind of look back and, after a year, look at, how it grew with the company plan and how it grew in your self-directed plan. What is my return over the last 12 months, 18 months, whatever the case may be. And you can weigh your options. But, because we're collecting payments over a long period of time, and this is where a lot of people have been able to save money and put money away, you can use those funds to continue to work for you, work better for you, and grow faster. So, like I said, those are just a few reasons why, I like to tell people about on why to invest in real estate note investing. Excuse me. Hopefully, that did make sense to you. It kind of, made you think, this kind of makes sense. Maybe I need to look more into this. Please do. You know what I mean? Try to reach out to me either through the Facebook or the Instagram in regards to this if you have any questions. But now is a great time. Like I said, there's more assets coming onto the market. It seems like after what happened with COVID, you had a lot of people in default or in some form of foreclosure or in some trouble prior to the pandemic, got stalled necessarily, and even more people got added to it during the pandemic. And now that we're kind of coming out of the pandemic, so to speak, we're starting to see more of this inventory coming out there. So there is an opportunity if you want to get involved in real estate and, maybe, some of the traditional things you don't necessarily want to do, or maybe you have done that and maybe want to look at a different option. Notes is a great way to do that. And then also a part of this, we're going to be talking about creative finances. You can create notes on current properties. If you are somebody that's investing right now, you can create a note on a property right now, whether it has a mortgage on it or has a lien on it or not. There's a lot of things that can be structured just depending on what you want to accomplish. Some people have tax reasons why they want to do it. Other people, again, just don't want to deal with the landlording responsibilities, but love the cash flow. There's things that can be structured when it comes to notes and creative financing that can get you what it is that you're looking for. So, if anybody has any questions about that, know anybody that, has, some money and looking to invest, may want to, look at this, please reach out to me. My contact number is 973-475-8488. That's my cell number. You can shoot me a text, give me a call, or you can reach me through my Instagram, which is Abundant Capital Group, and then also my Facebook is the same thing, Abundant Capital Group. But again, I'm here every Thursday. May bring some guests on later, but we're going to be here. We're going to be talking about this. The opportunity is now. Kind of goes back to like 2008, 2009. Really, that was a great time in real estate for people to either to purchase the properties or purchase notes. You could get things at a great discount back then. Probably won't see the same discounts now, but there will be an opportunity for people to get involved, in notes and in real estate based on, where, what's going on right now. We have a really high market. And then if you're able to buy, a note at a discount price in a booming real estate market, it could have some great benefits for you. So if you'd like to talk further, again, reach out to me, send me a message. Would love to kind of go a little bit deeper with you, answer your questions, and see if this may be something that you want to do. All right. So with that being said, it's been just about... we've been just about 25 minutes. Like I said, I don't want to keep people too long, give them too much information, but just enough to hopefully pique your interest, and we can talk outside of this. So everybody have a good night, and we'll see you next Thursday, 7 p.m. Be looking out for the notifications. All right. And also you can go to my YouTube channel, Abundant Capital Group on YouTube. There's some videos. I did a series on this, kind of went in depth a little bit more, kind of what I'm doing again right now, but those videos will go a little bit more in depth. If you want to go there, you can find it at Abundant Capital Group on YouTube. All right, so everybody have a good night, and we will see you next Thursday. Take it easy.